Anyway, so let's get to it. For those of you not familiar with the RODY fund, or for those of you that need a recap, I always used to trade the wheel, did a wheel strategy, sell puts, sell calls, pretty simple, right? A lot of people learn, that way, which I agree is probably the best way to learn. Now I'm trying something a little different. It's somewhat of a poor man's covered call, with a few additions, 2 put additions. Hopefully this view works, because I don't think I could zoom in anymore without making it difficult to look at. But basically, I'm choosing a select few stocks or ETFs, etc. And I'm doing 3 legs. I'm buying a call, I'm selling a put, and I'm buying a put. So let's look at the buy, call, sell, put part. Buy, call, sell, put. That's the synthetic combo. That's what a lot of us are familiar with. YieldMax does it, right? YieldMax does that. And it moves, when you do that, you move 1-to-1 with the underlying. And the beauty of it is, when you buy that call, there's an expense. So here's an example of open. We bought the call. Here we go over here, 305. That's what it cost us. Since we sold the put, we offset the expense by 263, now summing to 42 cents, right? However, when you buy the call and you sell the put, what are we doing? Well, we now basically essentially own the shares through a synthetic, through the long call. But we now brought in downside exposure. So here, since we sold a put, $7 strike, right? You're going to have to hold collateral for that. So that's basically kind of, in a way, replicating the wheel, because anytime you sell puts doing the wheel strategy, you got to put up collateral. So the only difference here is I'm buying a put for essentially 20% under, or whatever it calculates to. Each one's a little different, but I chose $5 here, essentially leaving a $2 gap. But what that does, it gives me the downside protection. God forbid open goes to 0. God forbid open just tanks in general. That gives me the downside protection. Also, it eliminates the collateral needed for $700. It now goes down to $200, because now we're buying a put for 5. So essentially 7 minus 5, $2 times 100 shares, $200. So you're obviously eliminating the need for that much collateral. You're protecting the downside, and so on and so forth. All right. Also, the expiration date I go with typically is 1 year or more out, if possible. All right. When I open this one, I don't even think they had anything further. And to be honest, in a way, fine. I'm happy, because I'm done with open. Open is, I don't like it for RODY anymore. Basically, there's too many contracts involved, too many commission fees. I'd rather do, a little more $20 stocks and up. That's my new kind of rule here. All right. Anyway, so let's get to it. I'm going to go right to Thinkorswim. I have it up. Now, again, I didn't roll anything, so I'm going to look at each one individually. I don't know. This is probably really tough to see, but I can't really make it any bigger, or else it's just going to be a disaster. I'm going to go right to the extrinsic cost. All right, so ELF has a negative, looks like negative extrinsic, which is weird. And then over here, negative extrinsic. But ELF is in the money. Actually, you know what? I'm going to do something first. I'm going to go to the end here, because I did do this now, which is very helpful to me. And if I scroll to the right, I could see, okay, who should I work on first, right? So let's zoom out a little. Let's do 100%. All right, who is out of the money? Who's in the money? All right, so the ones that are way out of the money, like Hood, they're extrinsic at this point. It's Friday. It's almost 2 p.m. It's going to be almost nothing. So in reality, yeah, I could probably just go in that order, right? So I can look at Hood first, and then go with maybe Palantir, because the ones that are really close to the money or in the money, well, especially close to the money, their extrinsic will be a little higher. So let's start with Hood. Hood is a disaster. Hood is my worst investment, and I double dipped on it not that long ago. So I made it even worse on myself, because I did add to it. I can safely say I'm no longer adding to hood anymore. I'm just going to make do with what I have and finish it out. All right, so covered call, I have a 130 call. Obviously, it's way out of the money because hood keeps dropping. Hood is at 110. If you look at the extrinsic, remember we said it should be basically nothing. Yeah, it's nothing. Oh yeah, we are live, by the way. Thank you all for being here on X, on YouTube, or wherever you're at. So I will try to keep in mind. I do see a question. That's why I bring that up. Question: does your spreadsheet in the Discord include the changes, updates you make to the show? Unfortunately, the template, you know, it's not update. I do something new. I probably add something almost every week, but yeah, I don't resend it every week. It's probably as of maybe a month or two ago. So I'm not sure what exactly you think is missing or if it needs to be resent. But eventually, yeah, maybe I'll resend the template. All right. Let's see. Oh, I didn't even pull up. Did I pull up the question? Yeah, maybe it went away. My ear is still clogged. It's getting there, but we're getting there. Okay. So, all right. Hood extrinsic is, again, see all this crap here. These are the three legs for various strike prices. So I have 3 different strike prices and 3 legs for each. So there's basically 9 positions that don't worry about it, right? What we're going to focus on is on the top, the 130 covered call, which, as we saw right here, 18% out of the money, clearly not in danger of being assigned. So what we're going to do is we're going to do a rolling order for the 130 call, and we're going to roll it into next week. All right. So before we do the transaction on Think or Swim, this is going to take some time, by the way, guys. We're going to go here and let's go back to the 150. I already plugged in. We're selling a call, 116 execution date, 123 expiration date. Current price so is 110. So what are we going to do? What strike price are we going to choose? Well, if we go to this tab here, which shows the hood holdings, you could see, what is my cost basis at? It is at, divided by, it's at 135. All right, so my cost basis is at 135 at the moment. I'm already selling calls underneath that cost basis. So again, we're going to have to see if I stick to that number or if I even go down further. Because again, Robinhood's struggling. It is struggling. So I'm going to click the 3 dots at the end of the line, the holding here. And again, you can see the mark. Under mark, it basically costs nothing to close it. But, you know, so one thing I could just let it expire. But what I do is I always have a position going through the weekend now. That was just something I kind of decided is better. I'm not going to try to time the market. I'm just going to always be in the position. All right. Anyway, so we're going to create, oh, that's closing order. I'm going to create rolling order. I'm going to click that. And it's going to come up here. So what we're going to see is the buy +3. This is the buy to close. And then we have a sell, -3. And then the call, 130. Now, if we look at this, the price, I'm getting the credit, I should say. It does show credit, 0.07. I mean, that's a joke, right? That's a joke. Also, I need to remember Monday's a holiday, right? Stock market, I believe, is closed on the Monday tomorrow. This Monday, you guys can confirm if you don't mind. But all right, so what is the 130? We have the options chain up here. Let's see if we can get that going here. It's very, they leave such, can I shrink this? Let's see if I can shrink. There you go. All right, that's better. So if I go to, again, the expiration date is January 23rd. If I look at the 130, it's probably, yeah, it's not even in the freaking view. If I hit all, I'm going to scroll down to the 130. The 130 has a 0.02 delta. Why does it have a 0.02 delta? Because the odds of it going to 130 next Friday are very minimal. So we're gonna have to choose a lower strike price. All right. So let's see what the 0.2 delta is at. 0.22 delta is at 116. Hell no, I am not doing that. The 0.18 delta is at 117. Oh man, this is getting dangerous. So what are we gonna do? We're gonna, again, and then you look at the last, so you can see the prices we're getting. So what I'll do is, let me go back here. What did I get last week? I got 26 cents. Not bad for Hood. So if I go back here, if I look for 26 cents, where does that land? That lands me around a 0.07 delta, a 122 strike price. But I'm gonna be even safer, to be honest. I'm not gonna mess around with Hood too much. I'm thinking the 125. Let's see how far out of the money 125 is. So if I type it in here in my spreadsheet, which, as I said before, yes, I do share it in the Discord. So it's currently 13% out of the money. And again, my cost basis on my synthetic on Hood is 135. Obviously, I do not want to get assigned at 125. So do I feel like 125 over the next 4 days next week, will be safe? 13% out of the money. I think so, right? What do you think? You know, that if you go any higher, you're basically going to get almost nothing. So I think this is probably what we're looking at, man. So the 125, again, has a 0.05 delta, which means, what is that? A 5% chance of assignment. Like, we should be okay. So stock price at execution, I always do this too to see what the price was. So it's at 110.09. Last week you could see it was at 115. So yeah, we dropped $5 since the last week. And now the premium. So for the premium, I'm going to plug in the net. Of course, there's about a close cost and there's a sell to open credit. So again, what did we say? We said we're going to choose 125. So again, yeah, we're dropping down $5. So we already did the create rolling order. Now we're going to move the price down. Let me just check the comments in case you guys catch something that I'm not looking at. No market for Monday. It looks like Roland confirmed that for me. Thank you very much. All right, so we're looking at, we're rolling the strike price down, going out another week. We're looking at a 14-cent credit. So we'll try to get 15 cents. So if I plug in 15 here, again, this will be for 3 contracts. That'll bring in $45. If that's the case, let's see. With putting up $12,719, that's an 18% annualized yield. That is god awful, right? That's not the numbers I'm used to. However, the difference is I'm in a hole. I'm in a hole in this freaking, this Hood. I'm just, it's a mess. It's not good. Again, because I started the position at 145, right? The first position I started, Hood was at 145. It has since dropped 100 to 110. It dropped $35. So what can you do, man? So again, that's why, it is what it is at this point. Anyway, we're going to go with the 125, and you can see it here. I'm going to go for a 15-cent credit, not 14. Let's see what happens. And I'm going to hit confirm and send. You ready? Okay. Here we go. Credit. All right. This will tell you what you need to. Credit $45. All right. And then we're going to hit send. Okay. No noise. What does that mean? It means it didn't go through. So it's still working. We're sitting here at 14 cents. So we have 2 options. Just lower it to 14, have it go through, or we wait, right? We wait and hope. But what happens with that is it could drop to 13, it could drop to 12. And yes, that has happened to me many, many times. So since I don't want to, oh, it just went up though. See, it went up to 1.145. Okay, I was just going to do 14. Now we shall wait. Maybe we'll wait a second. All right. So we'll let that sit there, and we'll go back to the file and see who we're going to pick on next. Any questions? Any questions? All right. Who is the next furthest out of the money? SoFi. All right. So we got a lot going on with SoFi. So if we go to here and close hood, if this drops back down to 0.14, I'm gonna choose 0.14. All right. So let's go to SoFi. And let's see, we have 2 covered calls because now we have 2 different positions. And the extrinsic is either a penny or less. So yes, we are ready to roll SoFi. Okay. So let's go over here. All right. So we have SoFi calls. We got, first we'll do the 5 contracts. We have a strike price of 28 currently. It is 5.66% out of the money. And parameter under 0.1, I'm closing. Anything above, I'm probably waiting. Although I'm live, so I'm closing everything. I'm just going in order, and hopefully by the time I get to the ones that are above 0.1 right now, they'll be below 0.1 as we get closer to market close. All right. Hopefully that made sense. All right, so SoFi, the current price is, where the hell is it? It's up. It's at 26.50. All right, so as you can see, SoFi dropped about a little more than $1 since last week. Our strike last week was 28. Our current average, our cost basis is 28. So I'd like to stay at 28. So what I'm going to do is probably a rolling order to the 28 and see what that gives me. Okay. Oh, it did move back down to 14. So what we're going to do is cancel replace order. We're going to lower this to 14, confirm and send. Can't, where'd it go? All right, didn't go through. See, now it dropped to 13. See what happens. But I think we'll probably get our 0.14. I'll give it a sec. If not, we'll probably score ourselves. But all right, so for SoFi, we're going to work on the 28 for now. We have 5 contracts at the 28. See it right here, 5 contracts. 20. Oh, it's a 29. It's a $29 call. Oh, no, yeah, it was a 29. We're going to roll it down to 28. All right, never mind. All right, so let's see. Here it is. All right, so here's the 29. We go to the right. Again, this is this Think or Swim desktop application, which obviously is through Charles Schwab. Create rolling order. All right, what are we looking at here? Oh, freaking 8 cents. Good God. All right, but that's at the 29. So what we're going to do is we're going to change the strike price to 28. Okay, 18 cents. Yeah, that's going to have to do, man. I'm not going lower than 28 on SoFi right now, at least on this position. All right, so what we'll do, we'll go back here. And the 28 we already plugged in. And if we plug in, let's see. Well, I want to see the delta actually. So first I want to minimize this. And we want to see the delta. All right, the delta on the 28 for January 23rd is 0.2. Perfect. 0.2. Can't go wrong there. 0.2 delta. And then the premium, we'll check on the rolling order. It's showing 18 cents. So hopefully we'll get it. What is 18 cents on an annualized basis? Let's see. Plug that in. 18 cents for 5 contracts. 100 shares per contract, $90. And how much we shelling out for this sucker? 4,304. That's 108% annualized yield. That's a win in my eyes, right? All right, so let's do it. Yeah, 18 cents. So see how this is open? You want to make sure that's locked. If it's open, it's not a limit order. If it's locked, it's a limit order. All right, now it's locked, so we're good. So you can either hit the lock, or you can hit plus minus whatever, and then that'll lock it. All right, so we're gonna roll that. We're gonna roll it down to 28. Confirm and send. Again, you want to make sure it says limit LMT. Yep. Okay, we're gonna credit 90 bucks. Hit send. Okay, there you go. You hear that sound? You hear it? Beautiful sound, isn't it? It's a wonderful sound. All right, so now I go back to monitor. And this thing is still working. All right, so Robinhood's still working. And here is the filled order. So you can see what it filled at, 18 cents. 19 cents for the new. I had to pay a penny. Again, you're not going to pay less than a penny on the buy to close. I had to pay a penny to close the old, so I got 18-cent credit. And again, that's what we plugged in, so that's what we're getting. And we go over here. What's the action on the old one? That's a rolling order. Done. All right. Again, I already did these formulas down here, so they're already populated. So that already filled in. All right. We got a question from Parabolic. How are you tracking the change in premium earned when rolling an order? So I do the net. Sometimes I do it as a formula. So in this example, I would do like equals 0.19 minus 0.01. Now, the reason I don't put the close premium up here, even though it cost a penny to close, is because I already considered what I made for last week done and over with. So if I have to pay money to close the prior week's position, that expense is going to go towards the credit I received for this week. So instead of saying I received 19-cent credit this week, I received 18 cents because I deducted the penny. All right. I think that answered your question. Okay. So we did SoFi number one. For those of you that may have missed it, I opened a new SoFi position. And the reason is I like SoFi for the RODY. I like SoFi as a long term. I think they'll do well. I think they have a bright future. So I took it easy. I did one contract, but guess what? I chose an expiration date of June 28, not 27, 28. So we have 884 days for this one. Again, experimental. Is that a bad idea? Maybe, maybe not. The strike price I chose, $25. At the time I opened the position, SoFi was at 26.31. SoFi is currently at 26.40. Okay, so not bad. The covered call I chose was $27. It's currently 2% out of the money. So obviously we can close this for rather cheap. All right. So let's see here. We're going to put the strike for the price in 26.40. All right. The strike, what strike are we going to choose? We had 27. Again, I'm probably just going to keep it there, 27. Let's see what the delta looks like on that. The delta was 0.28. Let's see. So here's SoFi. So you can see the other SoFi shows 0 under quantity, so it's gone. And then it's down here now as a January 23rd contract. So here's -1 contract. Here's the other one. My newest SoFi position. What's up, SoFi? I may need a bathroom break. It's going to be a long video. All right, create rolling order. And we'll click that. Plus, I have to like double check everything because I'm live. I feel like I'm going to screw something up. All right. So if I go down here, if I roll this to next week with a 27, well, number one, what's the freaking delta? All right. What's the odds of assignment? And if you go here, the 27, the delta is 0.37. So we could be safe and go to 28 bucks and do a 0.19 delta, right? 20% of, odds of assignment. We could do that. But I mean, do we really think SoFi is going to move? Has it really moved at all? Not really. So let's say if we stick to the 27, what the hell was the delta? 0.37 delta. Short week. It's at 26.40. What do we do? What do you guys think? Should I do a 27 or the 28 for SoFi? SoFi is currently trading at 26.40, and the 27 pays 41 cents per share. The 28 pays 17 cents per share. All right. Dylan Castile says 28. Anyone else? Oh, 29. Hell no. I'm not doing 29. 28 parabolic. If I get one more 28, I'll do 28. All right. So if I go down here and I go sell and I change this 27 to a 28, let's see what that looks like. It looks like a 16-cent credit. I feel $1 move up is possible. Yeah, I agree. Dylan gave me my my third 28. So I guess we will officially count it. All right, we'll do it. So we'll go to this call. We'll move it up $1 to 28. That'll make it 6% out of the money. And the delta on that, what do we say? 0.19 on the 28. If you go here, see the delta, 0.19. So 19% odds of assignment. That's always good. And then we go over here, open premium. Well, we'll plug that in after, and we'll see what it calculates to, because we already committed to this. So it looks like 16 cents is the going rate. So again, I can up it. I could try for 17 cents. Let's do it. Let's see if we get it. Hey, penny's a penny, right? Let's see. Ready? We're gonna do that. Confirm and send, and then hit send. Right? You always want to just double check everything, man. You gotta be safe. All right, I hit send. I did not hear anything. Okay, so here you go. It's under working order, and it's not clicking. Not clicking. Am I gonna get it? Are we gonna wait? What are we doing? I'm not gonna wait anymore. So what I'm gonna do is I'm gonna cancel replace, and I'm gonna lower it a penny to 16, and we will hit send. All right, did you hear the noise? Let me know in the chat if you guys hear the noise. All right, so we go to monitor under filled, and we can see right here, here it is. Where is it? Yep, 16 cents. So I go back here, I plug that number in, 0.16, and I scroll over. I don't know why this did not copy down, but so this obviously is a rolling order. Again, I just opened it this week, so actually these two amounts, this premium I got, it's for all the same week, so $36 for the week. So that'll add up down here. It'll show you, okay, $36 capital. Oh, I didn't put the capital yet, so we're gonna put how much capital are we using on this new position. We go here, and we could see the synthetic cost us $875, and we have a downside possibility of $500, right? Yeah, because that was the spread, and that's our capital, 1,375. So if you make $36 a week, shelling out $1,300 on an annualized basis, that's 136% yield. So can't go wrong. Can't go wrong. All right. Any questions? Let me know. All right. So that's SoFi. Let's go back to Hood. Yeah, it's still, man, Hood sucks. I got nothing else to say. I believe in Robinhood, but my Hood position sucks. All right. Let's go back to see who else is out of the money. All right, so you can see the income numbers are being filled in. These are formulas that I already filled in. So you can see I made 90 bucks on the first SoFi and then 36 on the second. All right, so, and then obviously I'll have to update all of these numbers. I'll do it at the end. I'll show you guys what I'm doing. But we'll see process of elimination. So we did Hood, we did Elf. Who else is out of the money? Palantir and Netflix. All right, so let's take a look at Palantir. I think I have a side piece expiring on Palantir. Yep, January 16th, I have a 160 put. Right now, Palantir is at 171. I also bought a put for 155. So I could probably roll these if it's worth it, or I'll just leave it. Yeah, I don't feel like rolling the side piece, to be honest, during this video, because it's a little pain in the ass. What I'm going to do, I'm going to let it expire worthless. And I'm noting that now because I'm cocky, right? I'm assuming Palantir is not going to go under 160 by end of day. All right. All right. Now back to the covered call. So you can see Palantir, I already set it up. We got the 185 strike from the current week. Our cost basis is 185. So the current price of Palantir, it's tanking today. It's at 171.29. Last week it was at 176. But if we roll it to and keep the 185 price, I think we'll get a reasonable premium, which is good. So let's look at the delta for the 185. So what we're going to do is we're going to go here. Where is Palantir? Here's the covered. Where the hell is the covered call? Oh yeah. So here's the side piece, but here's the covered call, the 185. There's two positions. I'm going to click that and then rolling order. Okay, 46 cents comes up. Let's go back. Wow, last week we got $1.50. What a difference. This week, 46 cents. So our income is going to take a hit this week, that's for sure. So what's the delta? Let's check that. How safe is this 185? It seems super safe. The delta is 0.10. Good God, that is super safe. Yeah, we could do 180. I can't do 180. Palantir is too nuts. I have to stick with the 185. So we're going to get what we're given here, and that's 0.46. So what we'll do is we'll take that 0.1 delta because we're sissies, and we're going to collect that premium of 0.46. We're taking a pay cut this week on SoFi. It's going to be 2 contracts. So let's do that rolling order. And again, just because it's 0.46 doesn't mean we accept it. We can always go up. Let's go up a penny. Why not? Give me 0.47, brah. All right, so we're going to roll that January 23rd. Confirm and send. Again, this is all clarification. You want to check the dates, the numbers, the credit. Boom, boom, boom. And then you're going to hit send. Wow. Stingy buyers, man. Can't shell out. Another freaking penny. So, man. And Hood just keeps dropping. We may have to take this 13 cents on Hood. All right. Oh, now this is, oh my goodness. See, now we lost out. We're going to have to take, let's try 46, see if it works. Damn. See, we should have did it the first time. All right, so see here, my limit shows 46. The last trade went for 46, and it's still not going through. I think I love it. So we can wait. We can wait, or we can put it down to 0.45 because, again, as much as we love another penny, it's annoying, right? So what do we do? What do we do? All right, we're going to roll both of these suckers down. All right, let's do Palantir first. Cancel, replace, and 0.45. Yep. Looks good. Send. There it goes. All right. Where is it? Up here, 0.45. All right, that's the end. Plug that in, 0.45. Again, massive pay cut this week on Palantir. That's $90 total. We will notate, obviously, the line here. It's a rolling order. And $90 on 10,776 invested. That's a 43% annualized yield. So, yeah, not bad. Not great. Obviously, last week much better. But again, our cost basis is 185. So we're going with our cost basis. If we go under our cost basis, it gets a little risky. And I don't think, to me, a 43% annualized yield is just fine. All right. And obviously, like I said, we're going to let that side piece expire. We're not going to roll it. I'm going to take a break on some side pieces. All right, let's get this hood out of the way. We're going to close this stupid thing for 13 cents and we're going to move on. 13 cents would be a 15% yield. Like, what the hell's the point, right? Why even bother? But again, it adds up to $39. So you get what you can get. You get what you get. You don't get upset. All right, so cancel replace. This is for Robinhood. And confirm send. Confirm send. Wow, it's still not going through. This thing is a joke. This thing is a freaking joke. I ain't plugging in 12 cents yet. All right, so let's go to the next trade. If you guys have any questions, actually, let me go to the chat real quick. Oh, man. Great time to start another. No way. I'm not adding to any positions. Well, actually, never mind. I just did on SoFi, but Palantir, I'm probably done with the May position. If I do start a new Palantir position, I'm going to do it for next year, like further dated, if that makes sense. All right. So again, you can see hood, the limit, 0.13, 0.13. That thing's got to hit eventually. All right. Let's go back over here. Roddy adds that. So you can see Palantir filled in $90. So far, our income not looking too great. Only $255. So let's see what else we got going. All right, so we did Palantir. Let's go look at Netflix. Netflix, we do not a RODY, but a Zicket, which is a zebra, essentially, which is a different play, buying 2 calls, selling 1 call, and then selling weekly calls on that 1 call. So here is the new position. Right now, we have a 94 strike. It is 6.9% out of the money. Let's see what the extrinsic value is looking like. 0.005. So again, almost nothing. And that's actually the cost of the trade, right? So what we're going to do is we're going to create a rolling order. We have a 94 currently, and Netflix is at, what's the price? If we go to the left here, 87.92. For the zebra, I like to stay at a 0.2 delta or less. Last week I did 0.12. So let's see what delta a 94 is at. So first, what we're going to do is we're going to select create rolling order. I'm going to click that. And then again, we're going to shrink this, and then we're going to go to the top, and we're going to look at the 94. It's not even on the picture. So we have to click all. There's the 94.26. So 0.2 delta would actually be 96. So we're going to go, should we stay at 94? I mean, crap. Who has earnings? Does SoFi have earnings next? Did I miss that? Crap. I screwed up. I forgot to check the earnings. No, Netflix has earnings next week. Okay. All right, good. I thought it was SoFi. All right. That being said, yeah, you want to play a little safer maybe on earnings. So Netflix has had such a sell-off lately. In fact, I believe the sell-off happened after the last earnings. So what I want to do is I want to go a little further out of the money, a little lower delta. In fact, maybe even a 0.1 delta, like a sissy. Not like I could take that income hit this week, but hey, it is what it is. So on a 0.1 delta, that's damn $100, and it still pays 0.41. Wow. Netflix is currently at $87. Let's see what $100 is. 13% out of the money. Wow. I don't know. What do you guys think? What do you think about Netflix earnings? We feeling good about it? Hard to say, right? If we go to stock analysis, I pull up Netflix. Let's see what the analysts say down here. Price target 127. Stock forecast buy. This guy says buy. This guy says hold. All of their price targets are well above $100, though. All right, I'll go with 100. I'll play it safe. All right, so we'll go with $100 on the roll. $100 again, 0.1 delta. So we'll plug that in here. So again, we're playing earnings. So we're bullish on the earnings. So we're playing a lower delta. But the good news if you trade over earnings is that, you'll make decent premium, even with a 0.1 delta, even with 13% out of the money, right? All right, so let's choose a $100 strike price and see what that comes to. Again, there it is, 0.41. So what we could do is we could try 0.42. One contract, over earnings, yep. Confirm and send. Again, 42, limit order, yep. Go. Nope, nothing went through. All right, so we'll just take the 0.41. Down here, confirm and send. Come on, man, freaking pain. We got 200 people on between YouTube and X. Welcome and thank you for joining. I'm just doing my trades. If you just joined, I'm just doing my trades live. I've never done all my trades live. I've done a few on the phone, but never like this. So this is a first. So hopefully you guys enjoy it. Hopefully it helps. Hopefully nobody's fallen asleep yet. All right, so we're going to do 0.4. We'll accept 0.4. Are you freaking kidding me? There it is. All right. Thank goodness. All right. All right, go away. Alert. Now let's see here. 0.4 net. All right, so that's what we're getting, 0.4. So we'll go over here. We're going to plug that in, 0.4. And scroll to the right. So for the prior transaction, we're just going to make sure that's a rolling order. And we're going to go here. Okay, so we got $40 for putting up 3,033. That is a 68% annualized yield. And again, we're trading over earnings, which is dangerous, of course. So Netflix could pop well over 100. It could also tank. And so, but we're not scared. We welcome it. We welcome the volatility. After all, that's what we're doing. We're trading options. We're basically selling volatility. We're not here for capital gains, although we do want it, yes. But the primary focus is income. However, we do understand how much an earnings pop, how much it can move. And especially in a company like Netflix with all this crap going on, I feel pretty okay with $100. I mean, not completely okay. If they have good earnings, obviously you can get blown through, then we'll deal with it then, but we'll see. We'll see. All right, let's go back here. So here's the Netflix. Here's the $40. We got a total of $295 so far. So who we got left? We did Netflix. We did Palantir. Hood still didn't go through yet because it's freaking useless. We got Elf to go. Did we do? We didn't do Open yet, huh? Wow. Let's go check Open. Open extrinsic is at 0.01. I have a $7 covered call. Open is up 7% today. It's at 674. I'm surprised that extrinsic is so low, but I will gladly accept it. So what we'll do here is we'll go to Open. Here's the new setup, right? The price of Open right now, as we said, 6.75. And then I'm going to do $7. There's no question about it. My cost basis is $7. What's the delta on 7? Well, let's find out. So we're going to go to Open. We have 10 contracts. It's right here. We're going to click the dots under those 10 contracts. We're going to click Create Rolling Order. Click that. And it goes to next week. 10 contracts, 7 strike, 0.23. Okay, that's fine and dandy. But what's the delta on the $7? We scroll here. We could see $7. The delta is 0.42. 42% chance of assignment, but we don't give a damn because Open barely, every time it goes up well above 7, it comes right back down. So, you know, we're going to play it tight on Open. All right. So what the hell just happened? It just went to 0.2. What was it? I forget. Anyway, so we'll take the 0.22. We'll just lock it up and then we will hit confirm and send. Lock it up, lock it in. Let me begin. All right. And we're going to hit send. There you go. There you go. Go to monitor. You can see right here, 0.22. So what I'll do is I'll plug that in right here, 0.22. Let me make sure the 10 contracts carried. Nope, it did not. And this is rolling order. And boom. Okay, so we got $220. Why? We made 22 cents per share, 100 shares per contract. So that's $20 per contract. And we also have 10 contracts. So that's $220. Now, if we look over here, $220 based on shelling out $3,830, that is a 298% annualized yield. So how is Open doing? Open is doing pretty damn good this week. So thank you very much, Open. All right. So we go back to the RODY as at. I did see a question though. Which of these holdings have a Zicket? Only Netflix so far. Again, because I'm brand new to that, so I'm just learning. All right, so here, SoFi, now we're up to $515 income for the week. By the way, what's our goal for the week? We want to make $765 in order to basically hit our income goal. All right, so let's go back here. And we could do ELF. Well, let's do ELF, right? Because ELF is way in the money, right? We don't want to get assigned on ELF. So let's roll it and get it over with. All right. So this is going to be a little different since we're deep in the money. So we're going to go to ELF calls. And believe me, it is okay to be in the money. That means your long call is doing very well. ELF is up today. ELF is up 1.04%. It's at $90, 90.11. Right now, our strike price is at 82. So without even looking at anything, what I'm going to do, I'm going to roll it up $1. That's it. Nothing more, nothing less. So hopefully I could do that. Now let's go here and let's go to ELF on the drop down. And ELF is right here, $82 call, one stinking contract. Extrinsic negative, which again, I rarely ever see that, but whatever. So we're going to do this. We're going to create rolling order. And we're going to do that. Now, if I rolled it to next week at an 82, that would give me a 30-cent credit, which is not that great, to be honest. So I don't have high hopes, because when I raise this strike price, what's going to happen is the credit is going to decrease. Hopefully, it goes down to like 20 cents, 15 at the least. Let's find out. I'm going to roll it up to 83. Oh, debit. It's a debit. All right. So it's an expense to roll it up. All right. So the question is, do we really think ELF is like going to keep going up, right? What do we want to do? Do we want to pay 78 cents for $1 more, right? Do we want to pay $78 for $100 more, possibly? Or should we keep it at the 82? That's the question. That is the question. I don't know. Don't know. See, the problem is if ELF just keeps going, gets out of hand, we're screwed. But again, we can't even roll it up $1. So this is an example of, you know, decisions, and we have a tough one to make. But so we can either come back to this, come back around, or we can just roll it at 82 and worry about it next week, right? What do you guys think? What would you do? Actually, I'm gonna take a bathroom break and play some music. I'll play the RODY song, and I'll be right back.
And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the key word. Freedom! Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Yeah, builds people up, less results address. Yeah, streams every day, never missing a beat. YouTube live X when the mic.
Okay, we are back. All right, let's see the comments here. Did you leave it for the short week to roll into full week? All right, so we're saying leave it. Let the short week be. Because again, yeah, if we had a full week, we would have an extra day. So rolling it up to the 83 would have been, you know, a little better. Because you can see we're still getting a credit here at the 82. So, you know what? All right, before we do that, let's go into the index plays. All right, so what I'm going to do, since I'm not working on this anymore, I'm going to hit delete, and it'll just go away. All right, so we'll come back to ELF. Oh my God, look at Robinhood. I should have just done the freaking 13 cents. I mean, at this point, is there even a point to playing hood? Jeez. Wow. I hate Robinhood. I really do. I hate him. All right. Let's keep going. Let's see. Oh man, the Qs. Oh man, I can't wait for this one. I should probably do IWM first though. But I'm too excited for this one. Let's see what the extrinsic's at. Oh wow, it's still at 0.2. All right. I'll come back to the Qs. Damn it. All right. We'll go to IWM. IWM, as most of you know, I did pay to roll up $1. I think last week it was $1. So let's see. We have a 251. Let's go to the IWM tab right here. So the current price of IWM is at 260. As it continues to go up, 266.42. Again, I'm going to try my best to roll it to 252. I mean, hopefully I can. I don't know. Let's see. All right, so 251 call. Oh my God, that is ugly. Wow. We are in ugly mode now. Even if I roll, it's at the 251 price, it's only going to give me 3 cents. Oof. So this is where you kind of have to make a decision. We could roll up. We could just roll. I don't know. What do you guys think? This is a tough one. Oh, just went up to 5 cents. Is IWM going to come back down? Does it ever come back down? Not really. I could go out another week. Oh my God. You know what I didn't do? Always on the freaking indexes. I forget that they're daily. My dumb ass. All right. So what's next Friday? $23rd, right? There you go. All right. 21-cent credit. So 23rd, 21-cent credit, which sucks. What if we move it up $1? All right, so we'd have to pay. Would I rather pay on ELF or pay on the index? Yeah, so again, the reason I'm rolling up $1, or I want to roll up $1, is I want to catch up to eventually the current price of 266. And obviously it won't cap me on the call, the income that I'm making on the long call. I also don't want to get assigned. And I'm more than happy to pay credit on the IWM to move it up $1, right? $77. However, I guess I have to, I guess I got to do my decision on the Qs now. So let's go to the Qs. I know there's some extrinsic left, but let's see how much we can make on the Qs. That's going to be our real moneymaker this week. Robinhood, you suck, by the way, if I haven't said it yet. All right, so let's go to the Qs. Again, 116 to 123. Current price of the Qs, 621.86. So obviously they came down $6 last week. Look at my strike. Wow. Perfect. So what is my cost basis? It is 615. So I'm already $6 above. So what I could do is to make up for the gap in income on the others, I can go in the money on the Qs. Play with this one, play with that one, right? So we got a January 16, 26. So let's see. We're going to do create rolling order. And again, for the expiration date, it's January 23rd. We want to make sure that we select the 23rd. And right now, if I go for a 621, which is what it's trading at, it's at the money, it's $421, which will that help me hit my goal? Let's see what my goal. Right now, I am $286 away. So yeah, that'll help me hit my goal. And it's at the money, essentially. So why don't we go with, should we go with that? $621, or should we do, let's see what a 620 pays. Not that much more. All right, we're going to keep it at the 621. All right, so we're showing 422. If I roll it out 1 week, same strike price, basically at the money. I just want to see what the delta is. Obviously, it's going to be pretty high. So if we go to January 23rd expiration, and we choose, what do we say, 621. The delta is 0.55. So we have a 55% chance of assignment. 621 strike price. And we're going to roll that. And we're going to get that sweet ass premium. All right. So we'll lock it in. We'll lock it in at what? I'll just do 420. I'll do your favorite holiday. I don't care. I just want it to go through. We'll hit confirm and send. There you go. All right. So we're going to go to monitor. And now we can see it filled in at 420. By the way, you can see the two transactions, by the way. Look how much I had to pay to close it, $1.21. Because now Qs just went up, by the way. We're in the money now. But whatever. Between the net, I got a 420 net. So if I plug that in here, 4.2. And we're going to put the rolling order on the old one. And we're going to go down here. See, okay, $420 what we made based on shelling out $8,600. That's a 253% annualized yield. So the Qs is the savior this week. That puts us at an income of $935. Again, our goal is $765. We are $133 ahead. All right, so now that excess, we're going to use that on IWM. And we're going to roll IWM up $1, and we are going to pay. We're going to pay to roll it up $1 again. And then if IWN continues to go up next week, what we'll do is we will consider rolling the actual synthetic up in price, right? And then, we'll go from there. All right, so let's redo IWM. 266.27, 266.27. So now that puts it there. We're going to do 252 strike. All right, so let's go to IWM. Here it is, just hanging out still. All right, we got a 251 call, create rolling order. We got to update the expiration date to the 23rd. And we're going to roll the strike price up to 252. again, eating away at our profits, $78. So, yeah, let's do it. All right, so again, as we go negative, that's more expense. So we're going to pay, we'll say 78 cents or $78 to roll it up $1 and let this live on a little longer. All right, sound good? Confirm and send. Let's see. Okay, so again, cost of trade, $78. Doesn't show credit, obviously. And we're going to hit send. Okay. They said, sure, we'll put this through. We'll gladly take your money. So now we go to monitor and we can see the debit 0.78. So we'll go over here. Oh, what was the delta? I wanted to check the delta on that. So the delta on IWMs, what was it? Forget. 252. $252. .97. Wow. 97% chance of assignment. Interesting. Premium negative 0.78. So that's 2 weeks in a row that we had to pay to roll it up. So how does that affect, again, down here, obviously we have negative annualized. How does that affect our totals? We go over here, we can see the negative. We're now at $857. So we made money on everything, although Hood is not, this is not accurate on Hood. We have to go back to Hood and make a decision. All right, so Hood, we still have a working order. Like, what do we do with Hood, right? What do you do? What do you do with Hood? Let's see. Yeah, we chose a 125 strike. Now it's 14% out of the money. I mean, we can't go any lower. We're just going to have to take 10 cents. $30. I mean, better than nothing, right? $30. But I don't know. I don't know. Yeah, let's just do it. All right, Robinhood went through. There you go. Okay. Failed orders. Yep, 10 cents. Awesome. Wow. So worth it. Not. All right. Let's go to rolling order down 10 cents, 12%. All right, now we check our numbers. Roddy has that. We're at 848. And we got ELF. We got ELF to go. So at this point with ELF, what do we do? Do we pay money to roll it or do we leave it? That's the question. Also, when is ELF earnings? $2.5. All right, we got a little bit of time left. So you know what? I'm just gonna roll it at 82. Wait till next week. Screw it. All right, ELF, let's see. ELF is at 90.08. Update the numbers, 90.08. And let's go over here. Let's do it. ELF. Here it is, January 16th, $82 call. Rolling order. All right, there's their 30 cents. We got the credit, 30 cents. Great. Move it on. Confirm. There you go. All right. 30 cents. Okay. So that's what we got. Problem is we need the freaking delta. All right. So the delta on, what was it, 82 is 100%. The delta is a 1. It's a 1 delta. But we got 30 cents. We got $30 in premium. You know, do we think ELF can come back down? So we're going to give it another week and then make a decision. We have some decisions to make on ELF and IWM next week. All right, $30 on 2028, 76% annualized. Okay. So, is that everything? Yeah, I believe everything went through. So we have 878 in income. Our goal was 765. That's an excess of $76. But first, let's check here. Let's go to monitor. There's no working orders. So first we will look at, it looks like we have a question. Let's go to the question. Sometimes my Fidelity orders fill for higher than what I submitted. Yeah. If you put a limit, and it can, of course, go higher. It cannot go lower. If you don't do a limit, it can go higher or lower. But again, I think you should always do a limit. But yeah, that just means you set the limit order, you put it through, and then it was selling for a little more once that went through, which is awesome. That did not happen for me today on any of these, but yeah, sometimes it does happen. All right, so you can see ELF has now a January 23rd on the new covered call. So I'm just double checking everything. Hood, we have January 23rd. Great. Yeah, we got the yeah, these January 23rd. Wait, do we have? Oh my God, Hood is still dropping. Hood's at 108. What the? Do we have a Hood side piece or Palantir? Yeah, no, Hood side piece expires the 23rd. All right, that's next week. All right, that's fine. IWM covered call January 16th. That has 0 contracts. The new contracts, -1. Netflix, January 23rd. We're good there. Open. Here we go. January 23rd. And Palantir. What we got here? Again, here's the side piece. We're not rolling that. We made a decision. And then here's the 2 covered calls at 185. Okay. Here's the Qs. We got January 23rd. Great. Yippee-ki-yay. Here's SoFi, January 23rd. Yep. Went through. STRC. Obviously, we don't do options on them, but we own 80 shares of STRC. SWVXS. We own about 1,000, I guess. Is that what it says? I don't know what it says. Yeah, something like that. And then my VIX position is down. But again, that's for the downside protection or fear protection. It's the fear index, right? So to protect me from people being fearful. All right. I think that's it. Oh, no, yeah. So I'm going to update the RODY as that. Let me show you guys something. Let me go to the comments, though, real quick. Okay, so we have the synthetic on all of these. That did not change, right? Unless I add a new position, which I did not. We have the stock price. This is formulated, so this is going to update automatically. And then, of course, we have the call strike. So what this is going to be is the new call strike for the new position. So all I'm going to do is add a number, because as you saw on my covered call tab, is I went down one row. So I'm just going to go down one row. So I chose 7 on open. All right. And SoFi, I chose 28 on the first. And then for the second, I chose 28. So I got both at 28 now, huh? Double check that. $23rd. Yeah, okay. Ah, that's a pain. Now it's under, now it says -6. Wow, okay. All right, whatever. All right, so that's that. ELF, go to 18. Should be the same strike. Hood, garbage. Palantir, didn't move. IWM, we paid to roll it up $1. Whoopie-doo. Was it worth it? I don't know. Again, I'm going to have to roll. I'm going to have to do something with my synthetic next week. I just don't have time today. Let's do that. All right, Netflix, we moved up to 100. So see, it's 13% out of the money, but they have earnings next week. So, so yeah, when you get to a point like ELF, you're 8% in the money. Now, what do? What you could do is, well, again, ELF is a stock. So ELF has earnings, and ELF has earnings coming up early February. It could drop just like it did. So what I'm going to do is I'm going to wait. I'm going to wait for earnings. And I'm going to see what happens, because it could drop. And if it drops, then I'll be fine. Then it'll probably go back to whatever my price is at. So after earnings, if it goes up, then I'll have to, make a decision on, my call, my long call, and either close out everything, or I could just roll it up and play it out. Right. I don't know. To be decided. IWM, I'm going to hope that it kind of drops next week. If it doesn't, I'm going to have to move it up a little. I'm going to have to take some profits on the synthetic, use those profits to offset the expense on rolling up the covered call a little higher. All right. Instead of this dollar crap, because it's costing us money each week. Qs are doing great. No issue there. And everything else is, we'll see. Again, Robinhood, it is what it is, man. If it goes up, I hope I get blown through. Honestly, I hope the 125 call gets blown through. I don't even care, honestly. In fact, I probably just should have sold out the money and dared it to go up, right? But I'm not that brave. Anyway, so that's the update. That is all of my trades, all in one. So you can see the income I generated is 878. I have the full breakdown here. What am I missing? Open SoFi. I'm missing the second SoFi. Damn. Where is it? There it is. Yeah. All right, there's $36. All right, so 878. Yep, it matches. Okay, but I have to make sure I'm covering capital used. Did I pick up the new SoFi? No. All right, so we added, I think that was this week. So, this freaking dog. All right, so we're at 50,000 total that we're using. We're using a lot, right? So it wouldn't be so bad if I closed that one position, and that one position being ELF. or even IWM, right? And I don't know. We'll have to see, because right now, I don't know. Who knows? Anyway, the point I wanted to get at here is, what is my annualized for the week? 90%. So all in all, we made a return on the investment, 1.75% for the week, which is 90% annualized. All right. Any questions? Not like you can hear anything with this freaking dog. But let's see. Let me pick her up. All right. Yeah. Any questions? Or should we play the outro? Intro and outro today. All right. As always, this is not financial advice. I am not a financial advisor. And this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, come back tomorrow. I don't know what I'm going to do tomorrow now that I did RODY today. But I guess I could still do the full recap where we stand with the closeout numbers. I don't know. We'll see. We shall see. But yeah, I'm going to do the outro unless there's questions, and then we'll call it a day. All right, so let's do it.
Not selling dreams, just showing the math. Wins and drawdowns, full on his past. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud just to test that will. Same mindset when the chart goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the key word. Freedom! Freedom! Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Builds people up, less results address. Streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his past. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud just to test that will. Same mindset when the chart goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. If you want that life, stay freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom!
Thank you for watching and have a great day. Later.